Well, it is now time to shift our focus over to the markets. This week, we're discussing the cattle markets. On Wednesday, we were joined in the studio by market analyst Kyle Bumsted. Here's our deep dive into the cattle complex. Joining us this week to discuss the markets is Kyle Bumsted. Kyle, we've never had you in the flesh like this before, so we sure appreciate you making the drive down here to Lincoln.
You bet. Thanks for having me down, Bryce.
We're going to start on the livestock side of things. Of course, cattle, that's where you specialize in. For somebody who's not been paying attention to this market, kind of size up the 30,000-foot perspective. What's been happening? Where are prices at today?
It's been rallying. That's what it's been doing, and it's been rallying because the cash market's been strong, Bryce. Cash market's been strong for feeder cattle. It's been strong for live cattle, and overall, it's been just a demand-driven market. We've seen box beef off the rails to the upside here. It's been gaining leaps and bounds, and that's a good thing because it shows us there's some good demand out there. But as we get here, towards the first week of May, some of the old seasonals might start to come into play. We've seen some cash trade this week already at around that 180 mark. And it kind of makes me question here, have we put in a cash high for these cattle here in the spring, which historically we do put a cash high in sometime this time of year. And with that 180, about $1 less this week here in Nebraska, it does tell me that it could confirm that we've seen maybe a cash high short term.
We'll dive in specifically with live and feeder cattle coming up here in a second. But as you talk about the factors leading to prices where they're at today, you said demand is strong. Also, the herd liquidation we've seen kind of coming into the market now, and people are realizing that. Talk a little bit more about the factors influencing the trade.
Well, that herd liquidation could get very serious here in Nebraska again very soon if we miss these rains coming up here that are in the forecast. A lot of people are out of feed. A lot of grass has gotten set back here because of the recent frosts, and we just simply don't have the moisture out there for these pastures. So, getting up there in the sandhills where I'm from, there is a lot of talk of, some more herd liquidation. Now, the last couple of years, it's been pulling the tail enders off, pulling the bottom ones off, and everybody's been doing that. Even had some neighbors liquidate sizable numbers of cows just so they had enough grass and enough feed to get through. And now we're sitting there asking that question again, are we going to be sitting here doing the same thing this spring?
Let's dive into the feeder cattle market in particular. Which month, I guess, do you follow when you look at the futures board, and where are prices at today?
I've been watching the August feeder cattle board because that's where the most volume and open interest is. Now, April expired this week here. It went off on Thursday, so that's a cash settle contract. And the May feeders, they're going to be top step here just based off the cash. So they're going to start really following that index. And that index really took some ups and downs here this week. We saw some lower trade in the feeders in the Southern Plains here last week due to those cattle coming in off wheat pasture on those Texas and Oklahoma direct. They were trading quite a bit cheaper. That dropped the index down over $3 earlier in the week. Then we got to the midweek here and we saw the index start to spike a little bit with some of the northern sales that were a lot better. But you look as far as feeder cattle in the August contract, there's a lot of premium out there. I think August feeders are trading somewhere between $20 and $21 over the May contract right now, which says to me if I'm hedged in the May with a lot of light calves, I could roll those out to the August and maybe pick up about $20 on that as far as a risk management standpoint.
Yeah, talk to me more about the risk management side of that market. You mentioned that's an opportunity for producers today.
That's right. That's a very good question. With the volatility in options is very, very cheap. And what we've seen here with this cash market doing what it's done, both feeders and live cattle, puts have been about the cheapest, safest way to go because nobody likes the margin calls, obviously. So the best thing or the easiest thing to do, given the fact that cattle seem to be affected by black swans when they happen, doesn't matter if it's, packing house fire, an economy, or a shutdown or a pandemic, just buying the cheap puts and rolling them up closer to the market, keep them in the, in the drawer there just in case something does happen. You've got a fail safe in case this market does break because it can happen. History has shown us it can happen.
All right, how about live cattle? We're also seeing benefiting from a rally over the past several months now and kind of following, I guess, in the feeder cattle trend as well.
Well, that's right. And, part of the feeder cattle rally has been the price of live cattle going up. I mean, obviously we sell some fats. We got to go, fill the yard again, so we got some cash here to work with. But, it hasn't been too long ago, 30 to 60 days ago, a lot of these guys were still talking $200 and $300 a head losses here in the Northern Plains. Obviously the winter was tough on things here, but the market has come up to help offset some of that. Now, what I'm seeing this week here, I saw some calf fed start to come through some of the regional sale barns, and the June contract trading 164 to 165, and these calf feds are bringing 174 to 175. That's a normal $10 basis, which says to me that we could be on the cusp of either we have seen the spring high as far as cash, or we're in the process of putting in the spring high as far as cash. But on the technical side of things here, this June contract could chop around here for a little bit until we confirm that that high is either in, or we're still waiting to confirm that high in the cash trade.
As I talk to producers, particularly grain producers, not in the cattle industry, so to speak, they look at these prices and say, well, these guys have to be making plenty of money at this point. I guess what can you share with us, shed a light on where profitability levels are right now?
Well, that's a good question. Depends on if you're in a corn deficit area. If you're in the far western corn belt in western Kansas, the panhandle of Texas, and you're still paying, still having to buy corn at 60 to $1 over, depends on where you're at, then the profitability does shrink a little bit. But, with this recent move here in the grains, it's been more of a hand-to-mouth type situation here with these feed yards. So it has cheapened up, and I do know some places here in the northern plains, there's still some corn deficit out there, so it just depends on where you're at. But it has cheapened up here recently as far as the corn side of things. The hay side of things, that's a little bit touch and go there as well, whether you've got it or not.
We talk about demand is strong, box beef prices, you're tracking those. Things are looking good so far. I guess what kind of hiccups do you see on the horizon for demand?
Hiccups could be anything with the economy. We already know that interest rates are going to go up. If for some reason the petroleum markets like gasoline does turn around and go up, I think we may have potentially seen a high in our gasoline for for a while here, the way the charts look. If we start to see some of that stuff move back higher or unemployment start to work back up, that could be a warning sign or flash of maybe demand, an issue with demand coming if we start to see some of those warning signs.
As you look at the health of the cattle complex, obviously breeding stock has to come in mind there. Heifer retention was not good as we look at some of those numbers. Are you seeing that change at all? Are people trying to rebuild the herd as we have this conversation here as we gear up toward May?
Some areas, yes, but a lot of areas we still got a lot of heifers on feed. So that's another thing we do need to keep an eye out here. As much as I'm not a fan of government reports, they do kind of give us a heifer breakdown or an estimate of heifer breakdown of heifers on feed. In this most recent report that we saw, there was still quite a few heifers on feed.
Well, it's good to do this deep dive. Before I let you go, 30 seconds or so, final word, what do you want to leave us with this week?
Well, don't throw risk management out the window just because we think it's going higher.